The year 2024 is shaping up to be a game changer for homebuyers and sellers alike. With the winds of change blowing through the real estate landscape, let's unpack the predictions and trends that'll define the market this year. Home prices are predicted to ease slightly, with an estimated drop of less than 2% for the year on average. Also, the combined effect of lower mortgage rates and income growth is expected to improve the home purchase mortgage payment share relative to median income, reaching an average of 34.9% in 2024. By the end of the year, this share is anticipated to slip under 30%. Here are a few key factors that could influence whether the U.S. housing market crashes in 2024. 1. Interest rates and inflation. The trajectory of the U.S. housing market is closely tied to interest rates and inflation. Significant increases in mortgage rates or high inflation could result in a substantial reduction in housing affordability, potentially dampening demand. Add circle. Notably, the Federal Reserve aims to orchestrate a soft landing to prevent drastic hikes. 2. Economic growth. Economic growth plays a pivotal role in regional variations. Regional variations play a significant role, with some markets appearing overpriced, while others remain relatively affordable. The likelihood of a correction occurring depends on the specific local conditions in each market. Overall, while projections point towards sluggish price growth, analysts generally believe that robust demand from millennials and low supply levels should act as a deterrent to a nationwide housing market crash in 2024, unless an unexpected severe economic downturn occurs. However, attention is warranted for potentially vulnerable overheated regional markets. Housing market predictions. 2025. In 2025, the housing market is expected to start picking up again, with home prices rising by approximately 1% to 2% above the current inflation rate. This increase will be due to a combination of factors such as the rise in real incomes, lower mortgage rates, and increased affordability. However, it may take some time to reach the home value heights of mid-2022. In 2025, more buyers are expected to pool resources with friends and family to purchase homes, seeking stability over renting. Additionally, advancements like 3D printing and factory-built components will revolutionize construction, enhancing quality and efficiency. Few key factors that could influence whether the U.S. housing market crashes in 2025. Anticipated moderation in interest rates by 2025 is expected to result in more affordable mortgages, supporting housing demand. However, the impact of higher rates earlier in the period could potentially dampen overall activity. Projections indicate sluggish but positive GDP growth in 2025, suggesting a generally stable economic environment. However, the possibility of a recession looms, which could significantly depress home prices, posing a potential challenge to the housing market. Job losses typically accompany recessions, leading to lower demand for housing. If a recession occurs, the unemployment rate may experience a considerable rise, further impacting the housing market dynamics. Expectations of increased new construction by 2025 could alleviate supply constraints, meeting the growing demand for housing. The large millennial generation reaching peak home buying age is a significant demographic driver, potentially mitigating the impact of economic headwinds. A potential decline in institutional investor purchases of homes could moderate house prices in specific markets, influencing market dynamics. Elevated price-income ratios and affordability challenges could impact the overall trajectory of the housing market. Government programs supporting homeownership and potential tax changes may introduce an additional layer of uncertainty, impacting prices. Are you curious about the future of the housing market? Let's take a look at some predictions for 2026. In 2026, the housing market is expected to continue its upward trend, with home prices rising at a moderate pace. The National Association of Home Builders anticipates that the pent-up demand for housing will be supplied between 2025 and 2030. However, changing demographics by 2030 may result in lower demand for new housing, potentially leading to a slowdown in construction activity. The trend of more buyers joining with friends and family members to purchase homes is expected to continue in 2026. The rising cost of housing and the desire for more space and privacy are driving people to pool their resources, resulting in more multi-generational households and co-living arrangements. The total cost of homeownership is predicted to become an even more important metric in 2026. Buyers and builders will need to factor in the cost of climate change and other external factors, such as the rising cost of insurance and building materials. This will make it essential for homeowners to consider the total cost of homeownership when making purchasing decisions. As we look ahead to 2027, one potential trend that could significantly impact the housing market is the continued urbanization of populations. With more people moving from rural areas to urban areas, the demand for housing in cities is expected to rise. This could lead to increased construction of apartment buildings and townhouses to accommodate the growing urban population. Advancements in technology are also expected to play a role in shaping the housing market. With the rise of remote working, there may be an increase in people relocating to suburban and rural areas, driving up the demand for single-family homes in these regions. Economic factors such as interest rates, inflation, and job growth, along with government policies, will continue to be crucial in influencing the housing market. Low interest rates could encourage more people to buy homes, while changes to zoning laws or tax regulations could impact the supply and affordability of housing. In short, the housing market in 2027 is expected to experience significant changes driven by shifting demographics, emerging technologies, and the impact of climate change. Despite the uncertainties, opportunities for both buyers and sellers are anticipated. It's essential for stakeholders to stay informed about the latest market trends to make well-informed decisions. Share your thoughts in the comments and subscribe for more informative videos.